Welcome to a Now Explained Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for a Now Explained Rough Cut. So now, let's get explaining. Bank reconciliation statement, what it is and why we need to do a bank reconciliation. What you need to be familiar with: source documents, bank payments daybook, bank receipts daybook, bank statements, general ledger. Other terminology you should understand: double entry bookkeeping, T account layout. What is a bank reconciliation and what is the purpose of performing a bank reconciliation? When you perform a bank reconciliation, you are ensuring that all the bank payments and bank receipts that appear on the bank statements you receive from your bank, that all these transactions are also recorded in your bank payments daybook and your bank receipts daybook. If you did not check that all bank payments and all bank receipts are recorded, then you could not be sure that all income and expenses were then recorded in the general ledger. For example, if an EFT, an electronic funds transfer, was made to pay the VAT return and we did not record that payment in the bank payments daybook, then the amount showing as the outstanding balance on the VAT general ledger account would be overstated in the general ledger. With a bank reconciliation, we can find errors such as the amount written on the cheque stub is different to what is showing on our bank statement. This could be a mix-up with the digits, such as recording 169 and 196. Fraud or human error, writing €100 on the cheque stub when in fact the cheque is made out for €1,000. Unrecorded payments. If we did not record a payment made to a supplier in our daybook, we could end up overpaying the supplier in the future, whether a cheque has been cashed or remains uncashed. By knowing what has not been cashed, has not been presented to our bank for cashing, we know that the value of this cheque will still have to come out of our bank account in the future. Finding lost cheques. If we wrote a cheque to a supplier for 1,000 and our supplier claims to have lost it, we can check and see, has the cheque been marked off as reconciled? If it has not been reconciled, this would indicate that it may have been lost. So how do we do a bank reconciliation statement? We need access to bank payment source documents, cheques and other payment documentation, bank receipt source documents, lodging books and other receipt documentation, general ledger bank balance, bank statements, bank payments daybook, bank receipts daybook. The bank statements, bank payments daybook and bank receipts daybook are the most important part of preparing a bank reconciliation statement. Here's the bank payments daybook and the bank statement. We are going to check that each payment recorded in our daybook also appears on our bank statement. We will write the letter B beside each of the values that agree. So we're starting with the €50 at the top for petty cash, and we found that on our bank statement. We're looking for cheque number 2 for €225, and we found that on our bank statement, and we marked that with another B. Now we're looking for cheque number 3. Is that on our statement for €57.60? Yes, it is. We marked that off as a B. And then there's an electronic funds transfer for €100. That's on our bank statement. Yes, so we marked that off with a B. At the end, if there is a transaction on the bank statement that is not marked with a B, then we have not recorded that transaction. If there is a transaction on the daybook that is not marked with a B, then that payment is outstanding. That is, it has not yet reached our bank. Here's our bank receipts daybook and bank statement. We're going to check that each receipt recorded in our daybook also appears on our bank statement. We'll write the letter B beside each of the values that agree. So our cheque we received from the directors for €1,001. There it is lodged in our bank statement, marked with a B. The €75 electronic transfer, and there it is on our bank statement. And 153 electronic funds transfer, again marked off with a B on our bank statement. At the end, if there is a transaction on the bank statement that is not marked with a B, then we have not recorded that transaction. If there is a transaction on the daybook that is not marked with a B, then that receipt is outstanding, that is, has not yet reached our bank. Here is our bank reconciliation statement. Let us examine each section. The balance as per bank statement, the balance on your bank statement as at the 31st of January. Less outstanding checks, a list of checks not marked with a B. Add outstanding lodgements, a list of receipts not marked with a B. Reconciled bank statement balance. After subtracting outstanding checks and adding outstanding lodgements, the reconciled amount should equal the balance on your general ledger. Balance as per general ledger bank account. This is the balance on the bank account in our general ledger. Difference. This is the difference in value between the reconciled bank statement balance and the balance as per the general ledger bank account. If the difference is not zero, then there is an error somewhere in your bookkeeping records. Here's another example. So here's the bank account and a bank reconciliation statement. In this example, two check numbers, 1015 and 1018, were not on the bank statement, so they're listed as outstanding checks. And lodgement number 105 has not yet appeared on the bank statement, so this is one of our outstanding lodgements. The bank reconciliation statement reconciled the bank statement back to our bank account in the general ledger. Both have 6,500. The bank reconciliation process. The bank reconciliation can be a time-consuming procedure and does require concentration and complete accuracy. You must ensure that you do not misread a value on a bank statement or in a daybook, as once you tick off, mark it with a B, the amount is marked as reconciled. It'll be very hard to find an error once a value has been ticked off. It should not have been ticked off. The letter B is commonly used in the bookkeeping and accounting world when performing a bank reconciliation. B stands for bank. A bank reconciliation statement is a method of double checking that all the bank payments and bank receipts have been recorded in the daybooks and the recorded totals posted to the general ledger. If you have multiple bank accounts, then you must do a bank reconciliation for each bank account. This has been an introduction to a bank reconciliation statement. It provides a double check that all bank payments and bank receipts have been recorded. You need to have completed a bank payments daybook and a bank receipts daybook. You need bank statements to complete the reconciliation. It is part of a process of preparing and double checking the general ledger bank balances that will appear in the trial balance and financial statements. For more information, go to nowexplained.com. Thank you for watching.